In December 2025, an American icon officially collapsed as iRobot filed for Chapter 11 bankruptcy, signaling the tragic end of an era for the company that once defined consumer robotics for the entire world. The news sent shockwaves through the tech industry because iRobot was not just another failed startup. It was the pioneer that brought robots out of science fiction and into our living rooms for decades. Instead of remaining an independent powerhouse, the company has agreed to be acquired by Shenzhen Picea Robotics, a Chinese supply chain partner that was once merely hired to assemble the very products they now own. To understand how this $3 billion giant fell from grace so spectacularly, we must rewind 35 years to the labs of MIT, where three visionary roboticists decided to change the way humans live. Founded in 1990 by Rodney Brooks, Colin Angle, and Helen Greiner, the company originally focused on serious government contracts, building rugged machines designed to handle missions that were too dull, dirty, or dangerous for humans. Their early success was defined by the PackBot, a military-grade robot that saved countless lives disposing of bombs in the Middle East and searching through the rubble of the World Trade Center after 9/11. But the founders had a bigger vision than just military defense. They wanted to bring robotics into the average home, leading to the 2002 launch of the Roomba, a friendly disc that vacuumed floors autonomously. The Roomba was an immediate cultural phenomenon because it was the first time a robot actually performed a useful household chore, effectively creating a brand new consumer electronics category that iRobot would dominate for years. By 2005, the company had gone public on the NASDAQ, leveraging its early monopoly to capture massive market share, while competitors struggled to build anything that could navigate a living room without getting hopelessly stuck. For nearly a decade, iRobot was untouchable, with their stock price climbing steadily as they introduced new features like self-charging bases and better navigation sensors that kept them light years ahead of the cheap knockoff brands. The peak of their financial success arrived during the global pandemic in 2021, when locked-down consumers spent billions on home improvement gadgets, driving iRobot's revenue to an all-time record high of nearly $1.6 billion. At that moment, the stock traded at nearly $200 a share, and it seemed like iRobot would own the smart home future forever. But beneath the surface, deep cracks were already starting to form. The primary issue was that iRobot stubbornly stuck to camera-based visual navigation systems, while aggressive competitors began adopting LiDAR laser technology, which allowed robots to map rooms much faster and navigate in complete darkness. Chinese competitors like Roborock and Ecovacs entered the market with these superior navigation features, offering vacuum mop hybrids that could scrub floors more effectively than the Roomba, often at a price point that was significantly lower. Simultaneously, American rival Shark Ninja executed a ruthless strategy of copying iRobot's best features, like the self-emptying base, and selling them for half the price, chipping away at iRobot's dominance in the mass-market budget segment. iRobot attempted to fight back in the courtroom by suing Shark for patent infringement, but they lost key legal battles, which opened the floodgates for other competitors to legally replicate their most profitable innovations. By early 2022, iRobot's market share had plummeted from a commanding 80% down to below 50%, and the company was bleeding cash as they spent heavily on marketing just to maintain their position. Recognizing that they could no longer compete alone against the diversified giants, iRobot accepted a lifeline in August 2022 when Amazon announced it would acquire the company for $1.7 billion in cash. The acquisition seemed like a perfect match, as Amazon wanted to integrate the Roomba's mapping data into its smart home ecosystem, and iRobot desperately needed Amazon's deep pockets to fund future research and development. However, this deal turned into a trap because antitrust regulators in the European Union and the United States immediately flagged the merger, fearing Amazon would suppress competition by favoring Roombas over other vacuums on its marketplace. For 18 agonizing months, iRobot was stuck in regulatory limbo, unable to make bold strategic moves or pivot their business model because they were legally bound to operate as if the merger would eventually close. While iRobot was frozen in time waiting for approval, their competitors accelerated innovation, launching advanced robots that could wash their own mops and refill their own water tanks, leaving the stagnating Roomba lineup in the dust. Finally, in January 2024, the deal was officially terminated due to insurmountable opposition from the European Commission, leaving iRobot alone, heavily in debt, and facing a market that had completely moved on without them. The fallout was immediate and brutal, with the company laying off nearly a third of its workforce and witnessing the resignation of co-founder Colin Angle, who had served as the face of the company for decades. Although Amazon paid a $94 million breakup fee, it was barely enough to cover the massive bank loans iRobot had taken out to survive during the merger review, leaving the company in a financial crisis. Throughout 2024, the new leadership tried desperately to restructure the business, but sales continued to freefall as consumers flocked to better and cheaper options from Roborock and Dream, which were now dominating the premium sector. By the start of 2025, iRobot was posting massive quarterly losses, and financial analysts began warning that the company had become a going concern, meaning there was a substantial doubt it could survive another year. To make matters worse, geopolitical tensions and new tariffs introduced in 2025 further squeezed their supply chain margins, as the cost of importing components and finished robots from their Asian manufacturing partners skyrocketed unexpectedly. The company attempted to launch new budget models to regain volume, but the brand damage was already done, and retailers had already given the prime shelf space to competitors who offered higher margins and better reliability. Desperate for capital, iRobot sold off its remaining valuable assets and patents, but the debt burden was simply too high to overcome without a massive injection of cash that no investor was willing to provide. This death spiral culminated in December 2025, when the board of directors made the difficult decision to file for Chapter 11 bankruptcy protection, admitting that the independent path was no longer viable for the company. As part of the bankruptcy filing, they announced the sale of the company to Picea Robotics, a Shenzhen-based manufacturer that had been building iRobot's products for years and was also one of their largest creditors. The acquisition by Picea Robotics is a supreme irony, representing a complete reversal of power where the outsourced manufacturer ultimately consumed the American brand that had originally hired it to build their revolutionary machines. Critics point out that this outcome highlights a broader failure in Western hardware innovation, where companies focus too much on software and branding while losing control over the actual manufacturing process that drives real value. The decline of iRobot serves as a stark warning to other tech giants that being the first mover in a category is meaningless if you stop innovating and allow your supply chain partners to surpass you. For the millions of customers who own Roombas, the future is now uncertain, as data privacy concerns arise regarding the transfer of home mapping data to a foreign entity under the new ownership structure. The brand name will likely survive on future products, but the soul of the company, the MIT innovation culture that birthed the Packbot and the original Roomba, has effectively been extinguished by financial mismanagement and competitive pressure. Looking back, the blocked Amazon deal will be remembered as the final nail in the coffin, a regulatory decision that was intended to protect competition, but instead resulted in the total destruction of a major competitor. Had the merger been allowed to proceed, iRobot might still be operating today as a division of Amazon, employing American engineers and continuing to push the boundaries of what home robotics could achieve for consumers. Instead, the intellectual property portfolio, consisting of thousands of patents covering autonomous navigation and cleaning technology, will now likely be absorbed into the massive Chinese robotics ecosystem, further strengthening their dominance in the global market. The story of iRobot is ultimately a tragedy of modern business, illustrating how quickly a market leader can collapse when it faces the triple threat of better competition, regulatory interference, and a fragile supply chain. From the rubble of the World Trade Center to the living rooms of suburbia, iRobot changed the world. But in the fast-paced world of consumer technology, past glory is never enough to guarantee future survival. As we watch the company dissolve into its new parent corporation, we are left to wonder if another American hardware company will ever be able to replicate the magic that iRobot captured in the early 2000s. The vacuum wars are effectively over, and while the robots won the battle for our floors, the company that started the revolution became the biggest casualty of the very market it worked so hard to create. In the end, the rise and fall of iRobot is a case study in the brutality of global capitalism, where innovation is a commodity, and even the most beloved brands can vanish in a few short years. Thank you for watching this deep dive into the history of iRobot. And if you found this analysis insightful, please consider subscribing to the channel for more documentaries on the business of technology and innovation.